So yeah, welcome to my first webinar. And today just gonna share how I recently booked a flight and a five-star hotel resort to Hawaii for just $1,000. And with full disclaimer, I don't guarantee the whole trip is going to cost you 1,000. I know Hawaii has a lot of good food and a lot of fun things to do like snorkeling and you know, the beaches and all that. So unfortunately, this $1,000 does not carry over to that. That might be a separate workshop in itself. Or so today we're just going to focus on the flight and hotel and how I kind of got there for under 1,000 for 3 people. So if it's just 2 people or yeah, 2 people going, it probably actually will be less. And so here we go. Let's see here. Yeah, so basically the hotel that we're going to be talking about today would be the Waikiki Beach Marriott Resort and Spa. That's kind of so me and some friends decided to, you know, with kind of restrictions come in, go in and all that being lifted, we decided to go to Hawaii. We actually had a trip planned back in 2019. You know, before it was just like for March of 2020, yeah. And of course, COVID hits, and it was like the week when borders started shutting down. So this was kind of a long time coming, and we finally, you know, had everyone kind of had time and was kind of like, you know what, let's go to Hawaii. And you know, we decided on this hotel and all that. And it's a five-star kind of resort, beach and spa. You know, I booked 6 nights, so there's no way to do it for 6 nights. But a lot of the families I'm going with, they book for 5 nights, and there's a specific reason why when you use kind of the Bonvoy Amex card for that. This is kind of the hotel that we're staying at. This is what it's looking at. So it's not, you know, Super 8 motel. It's not, you know, something that's kind of, kind of run down or, you know, some Airbnb. It's an actual, like a full-on resort. It's 7 minutes to the Honolulu Zoo, you know, right by the beach. Very, very nice. I think this hotel, if you were to book it without kind of the way I'm going to show you, would cost anywhere about $400 a night. So for 5 nights is about $2,000 already. So without including flights, you know, this hotel itself would be about 2,000, you know, and I think it's about $75 for resort fees as well. So it could run up pro quick. And so the concept I'm really going to be talking about today is called credit card churning. So really using the credit card promotions to get the points and then redeeming them for travel. And it doesn't have to just be for travel. Today we'll focus on travel. But you can actually do other things with it, with cashback credit cards and the like as well. But for today's presentation, we'll be focused on travel, just because, you know, the title is about Hawaii. But you can do it for many other things, like cashback, like you know, there's a couple cards with cashback and so on and so forth. That I'll kind of near the end of my presentation, I will kind of talk to you about other things you can kind of do. And so how I did it, right? The strategy basically for the hotel booking for a 5-night stay, I needed 210,000 points. And so with Bonvoy, they have they basically, their program is if you book 4 nights, you get the 5th night free. So as you can see here, you know, they pick, of course, the night with the lowest amount of points as your free night. And so these are the dates, and basically, you know, the 11th is for free, and every and then the points are based on kind of the popularity and seasonality of the time. And so basically for this one, you can see it's like mostly 50,000 points, and then, you know, the Wednesday it's 60,000, and in total it's about 210, and 250 is the resort fee plus all the taxes. So essentially I just had to pay 210 points, and then added for the resort fee was about $300 US. And how I did it was, you know, there usually are promotions. So you look for promotions for these things. So it's not like overnight. It was like, okay, you know, I'm just gonna book. There was a process. It did take me 1 or 2 years to kind of accumulate the points. And so again, with these kind of strategies, just like in planning, as you can imagine, time is your friend, right? Kind of like compound interest and all those other concepts. You want to have time and use time as your ally. And so for me, I had 75,000 points. Kind of I applied about 2 years ago, and then recently they gave me another promotion for another 75,000 points, where I spent $3,000 on the card, and they gave me 75,000 points. And that's how I ended up with 150,000 points kind of sitting on my account. And then so there's two ways to go about it. You can go and purchase points. Right now there's a promotion where you get 50% bonus, and it ends on March the 23rd. However, I decided to invite Haley, my spouse, into the program, and I was expecting 75,000, but they lowered the points. So currently their program is 55,000 points. And for being the referrer, I get 10,000 referral bonus points. So that's kind of how we are planning to get our 210,000 points in order to make this happen. And so a bit of planning required, but definitely doable. And Hawaii is just an example. There's Bonvoy. You can look at different kind of types of hotels. I've had friends kind of go to Toronto. I had friends go kind of to different places. China, for instance. The points will be less points will be required because the least popular destinations or least known hotels, the points will be lower. So for me, we just had the points and we just had the program to be able to fit it, and so that's what we did for the hotel booking. Now for the flight, basically what I did is, being a former TD employee, Aeroplan is always, there's always a promotion going on with Aeroplan, and so the promotion we were on was you get a buddy pass. So you buy a pass, buy a ticket on full price, you get the second one for free. And then for Aeroplan points, so you spend $1,000 and then you get 25,000 points. So in our case with my spouse and my son, we needed 3 tickets, and unfortunately, after there are 2, they count as a full seat, so it's no more infant on lap. So you actually have to pay full price for the ticket. There's no such thing as half price or anything like that. So it kind of worked out in our favor with the buddy pass. So we don't feel as guilty traveling because we have kind of this pass helping out. So with that, basically, that's how we get to $528. That was the flight for 1 ticket. And then with plus the taxes and airport fees and all that, it came up to be about $528 just for me and my son. And then for Haley, we decided to use points that we got from that promotion. And it's seasonal, right? So because right now, I guess things have opened up, but people haven't booked yet. So we were able to, for the dates we were looking, able to get it for 21,000 points, which really aligned with kind of the reward bonus points that we got for the credit card that we signed up for. And with Aeroplan, we just have to pay taxes, fees, and charges. And if you choose to, you can also pay the taxes and fees with points. I just find that that's not the most efficient use of your points. So I usually just pay the taxes and fees out of pocket and use kind of the points just for the base fare itself. And so that's the Air Canada side of things. And feel free to put on the chat box any questions that you have, or raise a hand, and I'll try to get the questions at the end. But yeah, feel free if there's any questions or anything like that needs repeated, more than welcome to kind of put in the chat box, and I'll be reading that. So the total cost, the Marriott Resort and Spa is $295 US for the resort fees, which in conversion is about $384 Canadian. For the flight itself from Air Canada, with the Aeroplan ticket, it was $82 for the airport charges, and then $530 for the buddy pass ticket, which were 2. So add it all up, $996 roughly. And another disclaimer, so I didn't include the $120 annual fee. So it was 3 times, right? Because I got it twice, so I had to pay the fee twice. And then my spouse had to pay the $120 for her card. So there is about a $360 to quote unquote buy the points. However, these cards usually do come with a free hotel night. So should you kind of wait another year and keep the card, after your first full year, they do give you a free hotel night to stay at a hotel. So if you want, you can use that, and that kind of covers your 120. So I decided to not include it. But if you were to include it, then I guess it's slightly over the 1,000. It'll be closer to about 1,360. Which are the credit cards that I use to get points, which I've alluded to earlier in the presentation? There are two. So the first one is the Marriott Bonvoy. And like I said, the promotion happening right now, and I have a referral link if you guys want, because I was searching online and I couldn't find this promotion. And so this was, I don't know, maybe as a member, I get an offer. So I will get 10,000 points, full disclosure, if you choose to use my link to sign up. But as a result, you do get 55,000 points. And if you have a spouse, then you can now, when you have a card, refer to your spouse or partner, and get them, and then you can keep that 10,000 points. And so right off the bat, if both of you do it, you'll have 120,000 points for you to use for a future vacation. And should that not be enough for what you want, you can wait for the promotion, cancel the card, like that's what I did. Wait a year or two, and then sign up again and wait for the promotions. They have gone as high as 75,000 Mirror Bonvoy points. So you can also look and wait for that promotion. But as of current market value is about 55,000. The second card that I use for this promotion is the TD Aeroplan Infinite card. Their current promotion is ending March 6th, but I've seen this kind of promotion get extended from time to time, different variations of it, but this one's very similar to kind of the one I signed up for, which is you get a bonus buddy pass to use for the year. And then after you spend about $1,000, you get 25,000 Aeroplan points. So this is exactly what I use to pay for my flights. The annual fee, yes, is $139, but at TD, if you have an all-inclusive account, which is keeping $5,000 in your checking, they usually waive a premium card for free. So presumably you can have this card for free, unlike the Marriott Bonvoy, there's no way to waive it. And the plus side of the Aeroplan card as well is you get, I think, the first check bag for free. Nexus is covered for, like for 4 years. If you have a Nexus charge on there, they'll cover it. So there's a lot of different perks. And also with the Aeroplan, TD Aeroplan Visa card, it actually requires less points to redeem. So it makes a lot of sense to have the card, because if I didn't have the card, it probably wouldn't be 21,000 points. So if you were to search online right now and say I want to use Aeroplan points to redeem, it definitely will be higher. So there's a bit of a reward for having this card, which is the new and improved card, different from previous iterations. So that's the card kind of we chose to use for our own inclusive account out of all the different TD ones. And so those are the two cards that we used for this promotion, for this deal. And like I mentioned earlier in my presentation, essentially there are different credit card and banking offers kind of available. For example, Vancity has a $600 offer right now where you sign up for a checking account. You do the typical things with the direct deposit to pre-authorized debits, which are the BC Hydros, the Fortis BCs, or your cell phone bills being automatically taken out. Or you pay I think it's 5 bill payments. Again, the offer, if you just Google search Vancity banking offer, they'll tell you kind of all the requirements. And then the other part of it is a credit card too, where they give you about 4% cash back for, I think, the first $5,000 that you spend. So there's about $200 there. So 300 plus 200, and I think they waive the annual fee, so they make it to about 600. And then the other one that's pretty good is the CIBC one. And similar thing, very easy. What I like about them is, unlike other banks, you don't have to have a minimum balance or anything like that. You can just have 2 pre-authorized payments being run on, and then they'll waive your fee. So really easy to get the $350. And CIBC keeps doing it where you can get it, and then you can close the account. And then, and I think next year, as long as it's like within 6 months or 12 months, you can reapply again. I know RBC doesn't do that. You have to have not been a client for 5 years before you can do another promotion. TD is very similar. I think it's either 1 year or 2 years. But CIBC, I've got money from them from time to time. This is my second time getting it. I haven't been on top of it, but now I'm kind of gonna test my limits a little bit. And yeah, this is my second time around getting the $300. And as you can imagine, I signed my entire family up. So, myself, my wife, my parents. Yeah, thank you, banks, for that. And last but not least, for those who have some savings kind of stashed up, and don't know where to put them, there is a bank by the name of EQ Bank that, from what I know, is the highest paying savings account, 1.25%. And with the recent rates going up, maybe it'll go up. We don't know. But for now, as of yesterday, or this morning actually, is 1.25%. So just, yeah, free money, better than any of the banks offers of like 0.1. They call it a high interest savings account. It's like 0.1% or 0.05%. So if you have any money kind of just sitting there, kind of, it might be used for something down the road, find anything short term, right? Anything less than a year, you don't want to, go into the markets with. EQ Bank is an option. And again, I have a referral link down there where we kind of both benefit. You earn $20, I earn $20 when you sign up with the link below. So, feel free to message me for this link, because if you just go on the site to sign up, I don't think you get anything. You just, you get the 1.25%, but you won't get the $20. And so there's a benefit of using this referral link. And it's higher interest. It's, it can add up to, I think, yeah, like $1,000 would be about 12. I can't do the math right now. I'm gonna skip on that. But yeah, I think, yeah, right now I'm earning about, like, I have about $1,000 or $2,000 in the account, just floating savings. So sometimes, like, what I use it for is, for example, for my benefits, whenever I go for massage or for physio, and then they put the payment, and I charge it on my credit card. So I got about a month where just this money just sits there before I pay a bill, and it's earning interest. So that's kind of what I do, and some savings that I have, I put in there that I might need for a purchase down the road, of some sort. So it's a really good way to put it. And the reason why the rates are so high, because a lot of my clients kind of ask me, is like, oh, is this a scam? Like, I've never heard of EQ Bank. It's because they don't have a physical branch. They're just a bank. They do lending, like they do mortgages, and they pretty much take all these internet deposits, and then they kind of repackage it and lend it out for a higher interest. And because they don't have a lot of overhead, right? They don't have branches, they don't have tellers to pay, they don't have advisors to pay. Everything kind of is over the phone. Then they can offer the clients that don't need service this higher rate. And so it's a win-win, right? They save on money, and they pretty much pass on those savings to savvy investors who are okay with transferring their money online and can do their own banking, right? Like, I wouldn't recommend, if you're trying to do a draft or do a wire or anything like that, that you need the kind of person to serve you. Then go to the big banks for those, or credit unions. But if it's just money that you don't need, it just takes 2 days for them to transfer it out. And so very, very simple process. Don't lock it, right? And of course, if you transfer a big amount, they do sometimes have a 5-day hold. So those are the only kind of two things that are inconvenient, but otherwise, very good product in terms of a savings offer. And yeah, and so with that, yeah, so questions and comments. I think I see on the chat. So how often can you sign up for these promos? So yeah, so Charlie, so what I've seen, different banks have different kind of, you have to read the fine print, but what I find is with TD, you can kind of, every 6 months, you can kind of flip between one or the other. So I have successfully went from like the TD first class travel, got my bonus, and then after 6 months, flipped it over to the Aeroplan, and then went and got my 25,000 points, and then 6 months later, flipped back to the cashback card, which they were doing like a 10% cashback offer for the first $2,000 you spend. And I've done that now. So for a year now. So I've done that once and it's worked. And so, but different banks have different offers. So I know like CIBC, if they given you an offer, you usually have to wait like a year, or you have to like apply for a new card. So just again, just ask kind of the rep on when you're applying for credit cards and stuff like that, to be qualified as new. I know TD, they'll consider you new as you do a product transfer. So I really like TD in terms of like the churning of credit cards. It's very, very easy. Other banks, not so much. So you just gotta be careful. Amex is pretty strict on those. That's why I was really surprised I was able to qualify for another $75,000 bonus, or 7,000 point bonus. But yeah, I like CIBC. I know I couldn't have switched to get the cash back. I had to pretty much apply for a new card, which means your credit gets hit a little bit, but not enough to cry about over. It's totally worth it. And then what you can usually do is you can either close the card, or if you want to keep the credit card, just switch to something that's free, and then kind of use it. Just wait for the promo, and add it or what have you. So you don't have to close the card, but you can if you want to. How long do you have to keep at EQ Bank to get the 1.25%? As long as you want. So it's not a GIC, it's not locked in. If you keep it there for 2 days, 5 days, 10 days, there is no like minimum period. And it's calculated yearly, it's paid monthly. Like I said, the only thing is if it's a large amount, just like any bank, they will do a 5 business day hold. So just make sure you don't send money that you will need to use in 5 days. Send money that you can put away and stash, and not use it, because yeah, they do they do hold your funds just to verify the deposit, make sure it's doing their money laundering procedures and all that, making sure the money and the source and all that sort of thing. So just make sure, because otherwise you'll end up having to borrow from your line of credit, which might be 3 or 4%, and it just backfires on you. So just put money away that is savings, and just kind of stash it away. And then okay, so from Betty, have you calculated the TD Infinite Cashback bank card versus the TD Aeroplan in terms of return on each dollar spent? Yes, I have. So the Infinite Cashback is really good for the groceries, gas, and reoccurring bill payments. That's 3%. So in the past, I've used that. And then Aeroplan is roughly about 2% on all purchases, right? And so I personally used to have the TD cashback for all my grocery and reoccurring bills and gas payments. I will put everything on those cards. So actually, if if we were to ever kind of meet in person, and you see my wallet, I probably have about 3 or 4 different cards for different purposes for their categories. And the reason why I switched over to the Aeroplan is because of especially if you're going to go travel. If you're not going to go travel, then yeah, stick with the cashback. I think it's higher return. But I think the flat percentage for the cashback Infinite is 1%. And Aeroplan is about, I worked it out to be about 2% return, like for the dollar value you can get back for the flights. But also all the other things in terms of like the extra bag, right? So like for someone with a young family, that's huge. Like that's about, I think, what, $30 per bag. So we can now check in our luggage for free. That's included. And then and what's also good, like the points, right? Like I tried to book the Aeroplan without the card, and then with it, like I was able to save, I would say, about 10 to 20% in savings. So you can use less points to go further. And so for that reason, I kind of switched over to the Aeroplan as kind of my go-to card at TD. And there are other cards out there for the cashback for those categories. For example, Scotiabank, their Momentum Infinite Visa is about 4% for groceries. And then CIBC has a dividend one for about 3% for gas. And right now they were doing promotions for free annual fees. So I switched over to them for that reason. And I'll probably do another analysis to see, okay, is it worth it for the $120 annual fee for the extra 1% that I get, or should I go back to TD and just get the 3%. So that's maybe for another webinar down the road. But yeah, that's kind of the analysis for those two cards in terms of the return. Any other questions? Oh, pretty good on time. It's like 8:30. All good? Okay, awesome. And so yeah, so yeah, that's one more. How much impact on your credit score would applying for many credit cards have? Yeah, I don't have like a I don't know the exact answer to that, but what I can tell you working on the bank side is that you don't want to be applying for too many credit cards at a too short amount of time, because then it will look like you're a credit seeker. So I wouldn't do it before like a big purchase, like a mortgage. But like for me, I probably did about 3 or 4 applications kind of in the winter time just for these things, because I already had my mortgage and all the big things. So when I checked my score after that, I think it just it was a couple points. It wasn't noticeable. And so you just don't want to give it, because every inquiry, every application, I mean, a lot of times if you're already a client, it's like a soft check. There's like a soft check and like a hard check, right? So the soft check, they already know about your banking habits and all that, so they just kind of check it with kind of the information that they have with you. And if it's a soft check, again, that the hit is really low. It's only when it's like a full-on application, when an adjudicator has to review your full file and they pull Equifax and all that, does your points really get hit. And the reason why you don't want to be applying for too many credit cards in too short of time, and you give off the the image of being a credit seeker, is that that raises red flags. Is like, oh, is this person gonna lose their job? Is it why are they? Because they don't look at the points, right? They don't think that, oh, this person is applying it for a promotion. They just see it as, oh, this person is desperate for credit, and that's why they apply 4, 5, 6 different times. And so it just raises red flags, but it's not to the point where like you won't be able to get a mortgage or anything like that. Like you can just explain, if you are getting a mortgage and you happen to do 3 or 4 credit applications beforehand, you just, again, just fill in the blanks for them, right? And just be like, yeah, I did it for the promotions, and here are my savings, and here are all the other things that I'm doing. I'm not seeking credit for their limit. I'm really seeking the credit card for the promotions. And so chances are, when they put that in that, on the application, then they will understand, and they can kind of create that story and kind of fill in the blanks in there. So the other question is, how do you know whether it will be a hard or soft hit on your credit score? Normally when it's so when you're at the teller at TD, and they say, oh, you have a pre-approved offer, so those ones, again, no credit score. That's just solely based on your banking habits and kind of your relationship with the bank. So those one, definitely there's no hits. A soft one would be basically like an inquiry. So when you don't have to sign for anything, they're just like, oh, this is going like over the phone when you're doing like for TELUS, when you're signing up for mobile phones and stuff like that. They'll be like, oh, we're gonna have to do a credit check and a soft hit. There's nothing you're signing or anything like that. Normally those ones would be what I considered as soft. And then the hard ones are the ones where like you're applying for like a full-on credit, so like a mortgage application or like a car loan or a car lease, where they actually have to contact Equifax to pull a full report on you to kind of look. Those ones would be considered kind of the hard, kind of the hard hits. But really that doesn't compare with if you miss a payment, right? So if you like missed not just one payment but several payments, those usually will hit your score. And if you have so the benefit since we're on the topic of credit cards, you want to have a high limit. And the reason for that is the utilization rate, right? So if you have a credit card with only like $5,000 limit, but you always are constantly using the 5,000, let's say you're putting 4,000 on it monthly because all your expenses are on that one card. That's actually to the credit issuers, that's a red flag. That's like, that's a 80% utilization rate, right? 4,000 over 5,000. So if you have offers, from the banks or, pre-approved offers to increase the limit, I always recommend my clients to take it. One is because you never know. You may lose your job, for various reasons, and you need the credit. And two is the utilization rate. And usually I talk about that, and a lot of clients don't know about that. They just like, oh, I just need 5,000. I never use it, so I decline it, right? They're like, oh, I don't want a high one, high limit because I'm afraid of people utilizing my card. But there's no fear in that, because if your card is being utilized, you are protected as long as you don't share your PIN or tell anyone your PIN. Visa does guarantee that all those charges will be reversed. And every time I've been hit with fraud, I've 100% got my money back. So I can stand behind that statement. And so it's okay to have a high limit, and basically don't use all the limit. Like if you have a high limit, so let's say your credit card limit is like 20,000 and you use 4,000, well, that's 20% utilization, and you want to keep it kind of below 30% if you can. That would actually really help build your credit score, is having a low utilization rate. And so that's why sometimes I have also, on top of the points, that's also why I have multiple cards, so that I don't have high utilization rates on my credit cards. And thus it would be good for your credit to do those things. So that's a tip there for credit cards. So yeah, when those tellers kind of let you know that you have pre-approved offers, I always take it, because you just never know when you need it. And with credit cards too, you think all of them are 19.99%, but actually some credit cards, like I think at Scotiabank, you can actually turn it into like a line of credit, and the interest rates are like prime plus 3 or 4%. So actually some people use the credit card as their line of credit. So in dire need and emergencies and stuff like that, credit cards could be used as an emergency kind of line of credit. But again, in emergency situations, and you probably will need a product change, like you don't want to be in one of these reward cards because the interest rates will be about 19%. You want to switch it to a lower interest rate credit card at that case, or have a home equity line of credit, or like an unsecured line of credit, right? You want to try to minimize anything emergency on credit cards, just because of the high interest rates. Yeah, so anyone else? Any other questions? Oh, okay, welcome. Yeah, so hopefully you guys found this useful. And here's my contact information on the bottom right. So if you, I know everyone's kind of situation is different, so yeah, everyone's financial different. Situations are different, so feel free to email me or contact me if you want kind of a separate one-on-one review of your situation or your family situation. Happy to kind of jump on a call and kind of help you guys out. I am, yeah, so and just kind of a little bit about me. I think I should have started with that, but I looked at the attendant list and I think everyone knows who I am, so I can kind of get away with it. But just a little context of Teleos. Well, the purpose and the hope of this kind of company is to educate and the masses, right? Kind of to help you with your financial literacy. I know kind of growing up, like financial literacy wasn't taught to me. In high schools, we were, with junior achievement, we were taught kind of, or in planning 10, we were taught, oh, like this is how you get a car loan. And I was like, why would I want to know how to get a car loan? Like cars are depreciating assets. And I wish, they taught me mortgages or getting a loan on something that would appreciate instead, right? And so I find there's a gap, and I want to address that gap. And unfortunately, kind of currently how it's set up is you have to have minimums before you get, that level of service. And so my hope is, kind of get rid of those investment minimums or whatever minimums, and just kind of go more on a consulting kind of route. And wherever you are in your financial journey, I want to come alongside you and kind of help you out. And so yeah, if you yourself, or you have friends or family or coworkers that are looking for that kind of that piece of advice, and my first calls are always free, just because I want to know to see if I can help. And then B is to see if there's a fit. And sometimes, clients will come by and it's, like a mortgage need, for instance, then I will set them up with a mortgage broker and what have you. So Yeah, you look for more of these. I'm gonna plan on doing kind of a webinar every week on Thursdays at this time. Yeah, so if you enjoyed it, share it with your friends, let them know. I think next week I will probably be talking about TFSAs and RSPs. That was one of my followers asked me if I can kind of cover that, and her clients, so she's a financial advisor at a bank, and she was like, yeah, my clients always ask about that, and I want a place to kind of send them to, and so that's a kind of a hot topic, especially RSP season just kind of finished a couple of days ago. So I'll probably talk about that. And yeah, anything else you guys kind of want, you know where to find me. You can email me. You can find me on Instagram on Teleos Wealth. And really, it's just to share knowledge. It's to equip. And I always find, the more I talk about it, the more I know about a certain topic, and so it actually does help me as well. So again, thank you for your time. Time is an asset, so you gave me quite generously 30 minutes of your time, and I really do appreciate that. And so with that, we'll stop. Is there I'll stop the what is it, the recording. Stop